Good morning. Here is today's Korean economic news briefing. We begin with significant developments from the Korean government, signaling a strong push for corporate innovation and economic vitality. Vice Prime Minister and Minister of Economy and Finance, Gu Yun-chul, chaired the inaugural meeting of the Public-Private Council for Corporate Innovation Support yesterday, emphasizing a comprehensive approach using financial, tax, and regulatory innovation to fully back businesses. The Vice Prime Minister highlighted the government's intention to strengthen startup support and innovation incentives to foster the growth of global unicorns. This new council, involving the government and Korea's 6 major economic organizations, will operate as a powerful, standing platform for public-private cooperation. Vice Prime Minister Gu is personally committed to visiting business sites monthly to hear grievances and swiftly develop solutions with relevant ministries. However, during the same meeting, Vice Prime Minister Gu issued a caution to some enterprises, urging them to avoid complacency, such as resorting to collusion or monopolistic practices for easy domestic profits. He stressed the importance of cultivating world-leading products and services to expand Korea's economic pie on a global scale. In response, Choi Tae-won, chairman of the Korea Chamber of Commerce and Industry, affirmed the business community's active commitment, pledging to respond with increased investment and job creation. Chairman Choi underscored the unimaginable intensity of AI competition, noting that in this new landscape, there are no eternal allies or enemies. This highlights the government's dual strategy, providing robust support for innovation while fostering fair competition and global ambition, recognizing the transformative impact of technologies like AI. Moving to the broader macroeconomic landscape, external uncertainties continue to loom large. Bank of Korea Monetary Policy Board member Wong Kun-il stated yesterday that the escalating Middle East conflict has significantly heightened the uncertainty in the economic outlook, necessitating a prudent neutral stance for monetary policy for the time being. Mr. Wong noted that future inflation and growth trajectories would be heavily influenced by developments such as U.S. tariff policies, major countries' monetary and fiscal policies, the semiconductor cycle, and particularly, the evolving situation in the Middle East. The Bank of Korea has maintained its benchmark interest rate at 2.50% for 6 consecutive meetings, and this neutral guidance suggests a cautious approach amidst these global volatilities. Domestically, research institutions indicate that a supplementary budget, if implemented within the scope of excess tax revenues, would likely have limited adverse effects on interest rates, exchange rates, and inflation. This comes as the economy, despite an export boom led by semiconductors, still faces challenges such as negative GDP gaps, cumulative domestic demand sluggishness, and high inflation impacting vulnerable groups. Meanwhile, global monetary policy expectations are mixed. While U.S. consumer price data offers some relief, making a rate freeze at the March Federal Open Market Committee meeting almost certain, the surge in international oil prices due to the Middle East conflict has largely dissipated expectations for significant rate cuts later this year, leading to a sharp drop in U.S. Treasury prices. Internationally, China has set a lower growth target but declared an all-out effort in the AI economy, increasing its fiscal deficit target to 4% of GDP and reiterating its commitment to scientific and technological self-reliance, with substantial investment to achieve its intelligent economy vision. Turning to our financial markets, domestic investors are navigating this complex environment with varied strategies. The Sehok Gaming phenomenon, where Korean retail investors directly purchase overseas stocks, remains robust. Interestingly, due to increased currency volatility, there's a growing trend of domestic investors buying Korean-related exchange-traded funds, ETFs, listed on U.S. exchanges, as observed in the top ranks of their net purchases this month. While the recent period of interest rate hikes and economic uncertainty saw a clear shift towards cash and short-term bonds, the domestic stock market's strong performance from late last year to early this year has reignited demand for domestic investments and ETFs. Yesterday, the Kospi closed down by 0.48%, while the KOSDAQ rose by 1.02%, reflecting continued volatility in the domestic market. On Kospi, individual investors were net buyers, while foreigners and institutions were net sellers. Sector-wise, construction, non-metals, machinery, and transportation equipment showed strength, while others exhibited mixed performance. The Korean bond market is also facing headwinds, with concerns that external variables like rising Japanese interest rates and the Middle East situation could dampen the expected positive impact of Korea's potential inclusion in the FTSE World Government Bond Index, WGBI, with market participants closely watching the actual inflow scale and speed. In the realm of industry and science, advanced manufacturing and AI are taking center stage. Hyundai Motor Group is actively building an electric vehicle battery circular economy system in Indonesia, partnering with China's Huayu Recycling for EV waste battery recycling. This move highlights the automotive industry's focus on sustainable practices and resource efficiency. Perhaps the most exciting news comes from Samsung SDI, which declared all-solid-state batteries as a game changer for the era of humanoid robots. At the Interbattery 2026 FE conference, Samsung SDI emphasized that these batteries offer absolute safety, lightweight design, and high energy capacity, capable of extending robot operating times up to 8 hours. The company announced its preparations for mass production of all-solid-state batteries next year, targeting the rapidly expanding robot market. The Interbattery 2026 exhibition itself saw record attendance, with over 23,000 visitors on its opening day, showcasing the industry's rapid expansion beyond EVs into energy storage systems, AI data centers, and robotics, particularly with an eye toward the physical AI era. Shifting to the real estate sector, the Housing and Urban Guarantee Corporation, HUG, has enforced its one strikeout policy for foreign landlords who fail to return JONS deposits. Over the past year, 30 properties owned by foreign nationals have been put up for forced auction due to unreturned deposits, reflecting a rise in JONS fraud involving foreign owners. This number is expected to increase as more cases are in the pipeline. Meanwhile, concerns over strengthening real estate regulations led to a 4.5-point drop in the March nationwide apartment occupancy outlook index to 94.4, indicating heightened apprehension among housing developers. On a more positive note for housing supply, the Korea Land and Housing Corporation, LH, plans to provide 37,399 rental housing units this year, an increase of about 6,000 units from last year. Significantly, 57% of these, 21,449 units, will be supplied to the Seoul metropolitan area, aiming to stabilize the JONS and Wholesale monthly rent markets. In the private sector, well-established brand apartments are gaining significant interest in specific regions, such as the Sharp brand in Hwaseong Dongtan 2 New Town, as consumers prioritize proven developer quality. In the international economy, a significant trade development comes from the U.S., as the Trump administration initiated Section 301 FED investigations against 16 countries and economic blocs, including Korea, Japan, China, and the EU. This move is framed as a means to seek legal justification for potential tariffs, following a U.S. Supreme Court ruling that nullified reciprocal tariffs. The stated premise for these investigations is the overproduction capacity and associated unfair trade practices of these trading partners. For Korea, the investigation specifically targets electronics, automobiles, and shipbuilding, citing Korea's continued trade surplus in these sectors. China has vehemently opposed this, calling it unilateral tariff measures, and emphasizing that tariff wars benefit no one. Taiwan, however, stated it was pre-notified and prepared, expressing confidence that its most favored nation treatment with the U.S. would be maintained. This development raises concerns about renewed trade friction amidst already volatile global conditions, especially with the ongoing Middle East conflict and rising oil prices. Finally, the discussion around AI's economic impact continues. The Middle East conflict is causing global big tech companies to speed adjust their AI infrastructure investments in the region, with some even considering alternative locations. This follows reports of AI infrastructure, such as AWS data centers in the UAE and Bahrain, being affected by the conflict, highlighting the geopolitical risks to digital infrastructure. Domestically, the government is preparing a basic plan for AI and the future of labor to address rapid shifts in job landscapes. Simultaneously, the competition for advanced AI agents is intense, making related startups and talent highly sought after, as seen with the CEO of Octane AI joining Meta's AI division. Korean investment firms are also proactive, with IMM Investment hosting an AI workshop with OpenAI to bolster the technological competitiveness of its portfolio companies. However, a cautionary note emerges from the U.S. private debt market, where the AI destruction theory is raising concerns about liquidity risks for private equity firms heavily invested in the software industry, leading to increased redemption requests. In summary, Korea's economic landscape is characterized by a government keenly focused on fostering innovation and supporting businesses, especially startups, while navigating complex global headwinds. Geopolitical tensions in the Middle East, coupled with renewed U.S. trade protectionism, are introducing significant uncertainties to monetary policy and global trade flows. Domestically, industries like advanced batteries and AI are showcasing tremendous growth potential, while the real estate market grapples with regulatory shifts and housing supply initiatives. For investors, the current environment demands careful navigation. While government support for innovation and the robust growth of future industries like AI and advanced batteries offer promising opportunities, the heightened geopolitical risks, potential trade frictions, and volatile global commodity prices necessitate a cautious approach. Monitoring the implications of U.S. trade policy on Korean exports and keeping a close eye on global energy markets will be crucial. For general viewers, the government's push for corporate innovation aims to translate into economic growth and job creation, particularly in high-tech sectors. However, be mindful of how global events, such as the Middle East conflict and U.S. trade policies, can influence domestic prices and economic stability. The rapid advancements in AI will undoubtedly reshape our future workforce, making continuous skill development increasingly important. That concludes today's economic news briefing. Thank you for joining us.